Consumer-focused tech stocks have witnessed a sharp sell-off since their stock market debut. Global tech sell-off amid withdrawal of liquidity and rising treasury yields coupled with high valuations butchered returns. These companies now face another blow. Lock-in period for pre-IPO investors will end this month for a number of companies, potentially supplying $14 billion worth of shares. This included companies like PB Fintech and FSN e-commerce owned Nykaa, whose lock-in period ended yesterday. Meanwhile, shares of Paytm and Delivery will brace for the impact on November 15 and 19 respectively. These stocks have slumped up to 30% over the past 1 month amid concerns that huge supplies from large investors may take the stock prices to new lows. Analysts too warn the expensive valuation and stiff competition in a weak macro environment offer limited upside in new age tech companies.
There have been a few brokerage reports having targets of 2,200 plus for Nykaa, but I would differ. Nykaa's earnings showed a good growth Y on Y since the base was low. But a 5 crore quarterly profit on a market cap of 52,000 crores, I still believe it is quite expensive. Even if one projects, say, 35% CAGR for top line and 85% CAGR for EBITDA till FY25, we end up at 100x plus of EV by EBITDA and 200 PE, unless we assume that it will grow at the same pace for the next 10 years. The other issue which bothers me regarding Nykaa is its treading into a new market of fashion, which could be quite risky. It could be one of those few which are venturing from beauty and personal care to fashion. I mean, we have seen a few luxury brands, global luxury brands, which have diversified from fashion to BPC, which is beauty and personal care, but in a limited manner. Now, I mean, can we extrapolate the success of BPC to fashion for Nykaa? I mean, I would doubt that. Also, a couple of senior level exits does make investors uncomfortable, though outwardly it may seem smooth in terms of the transition. Looking at Paytm, secondary markets realize early that finally valuations come from cash flows and not cash burn, unlike the PE investors. Also, Paytm was more of a hype on the brand, as its supposedly bread and butter business may not really throw up positive cash flows in the foreseeable future. It's got its fingers across financial services, hoping to monetize. But even here, there is formidable competition coming from the conglomerates who are now focusing on financial services. Since it has corrected sharply, the correction hereon may not be steep unless the performance deteriorates. But upside too will be limited.
In the July-September quarter of FY23, Nykaa's net profit jumped 344% year-on-year to 5.2 crore rupees. Revenue from operations too climbed 39% year-on-year to 1,231 crore rupees. PB Fintech, the parent entity of insurer tech platform Policy Bazaar, on the other hand, narrowed its net loss to 187 crore rupees in Q2 FY23, as against a loss of 204 crore rupees last year. Paytm's net loss, however, widened to 571 crore rupees in Q2 over the previous year, while revenue jumped 76%. A steeper correction down the road could make these stocks a favorable bet.
Hardly they make profit. So it is, I will not agree that it is a great result. No, the valuation was very high. No, so I think, the stock needs to correct more to become attractive. So the P ratio, it is 1200 times. No, for which the company has to grow 50% CAGR every year, which I don't think will be very possible. If you take year-on-year basis, their growth was not that great. Year-on-year basis, they have grown 39%, if I'm right. So if that is the growth, I don't think this valuation. If it corrects another 50%, I would like it. Otherwise, no.
Since their debut at the bourses, shares of Nykaa, Paytm, Zomato, Car Trade Tech, PB Fintech and Delivery have crashed up to 68%. Analysts expect related stocks to see a turnaround performance once these loss-making companies start delivering growth and sustaining profitability. As regards today, macro reports, global cues, rupee movement, foreign flows and crude oil prices will dictate market trends. Besides, India Inc.'s quarterly earnings will continue to be tracked as companies like LIC, M&M, Adani Power, Hindalco Industries, HAL and Delivery will report the July-September quarter results on Friday.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.